very, very hard to predict between quarters. Like it's hard to say that like next Tuesday, Microsoft is going to skyrocket and go up 5%. But on an earnings call, there's definitely a swing that might happen in any given day. So that's a phenomenal time to put in like a bet. You're going to gamble a little bit on whether or not you believe the expectations of the world, the street, if you want to call it Wall Street, and retail investors. This is a phenomenal time to buy a stock. And then literally the next day you could trade it. Like boom, it hits, it's going to pop. You're going to get a 4 or 5%, whatever, 3%, whatever it is. Boom, you get the pop and you can trade. And like Spotify, I mean, honestly, Spotify's having a bad day. Let me bring up Spotify here. Look at this. We're gonna do a little transition. Ooh, no, a little sound. I just want to show you the chart of Spotify, right? And I see the headlines that are pretty interesting, right? So you've obviously got these two different headlines here. Joe Rogan spread anti-vaccine misinformation. Spotify CEO is standing behind him. Love that. Love that they're letting him speak his voice. And obviously, he's the biggest creator on the platform, so we're going to have to back him up a little bit. But Spotify reports Q1 revenue as Joe Rogan podcast exceeds expectations. Great. I saw what they were sharing as pretty fucking good. 356 million monthly active users, up 24% year over year, and 158 million subscribers. So if you look year over year, it's doing pretty good. Now, it grew a little slower compared to what the growth curve that they had in 2020 because, well, yeah, there's a reopening going on in the world, right? So you've got a different quarter than normal. You've got a lot of people paying attention around the globe. And, you know, Spotify is coming out with a whole streaming system, bringing ads to podcasts and doing subscriptions around that and taking 0% cut until 2023 from creators that are putting podcasts online. I love it. I think it's great. Last episode, I mentioned that they're making a deal. There's some kind of deal going on with Facebook or I guess Facebook and Instagram and that whole suit, I guess, with Spotify, you know, which is gonna be great. We'll see, you know, how that tackles Apple and how that plays out. But what you see and how we transition into the topic of earnings reports and, you know, into a segment that I still don't have a name for. I came up with Investors Corner earlier.
I like it.
Corner. I think Investors Corner is like a decent segment. Financial deep dive. That's the segment we're going into. I'm loving being an investor and a trader. I've been an investor and a trader for some time. I've been in the stock market basically for as long as I can remember. But I've been actively doing such a little bit more starting in 2019 and kind of taking on a little bit more responsibility. Now, here is the chart of Spotify over the last week. So you see a little bit bump, right? Okay, we know the earnings are coming in. We know something's going to happen. There's a little bit of a bump. And then, boom, earnings come out and down. Down. Why is it down? Now, we also saw things like Google. Look at the chart on, let's look at Tesla over the last week, right? This is opening around when Tesla reported, right? Right after, so they reported on the 26th, but boom, this is what it looked like opening. And then we've got, no, not that one, Google. This is what happened. They reported yesterday, and then boom, this is what the opening looked like today for Google. Now, the reason I want to point this out is I believe company earnings is a phenomenal opportunity for trading, okay? Here's why. We're in a world where the news is dominating a lot of the trade. And what is happening as a trend amongst these different earnings that we're seeing is if expectations are exceeded, so if a company puts out their expectations of what the revenue might look like or their growth might look like, how many users they have, if their social media platform or their Netflix or whatever it is, you know, if the earnings are beating expectations, the stock has a pop. And if they're like matching expectations or they're like doing great, like Microsoft is doing great, they do earnings, boom, matching expectations, a big drop. Now, volatility like that is very, very hard to predict between quarters. Like it's hard to say that like next Tuesday, Microsoft is going to skyrocket and go up 5%. But on an earnings call, there's definitely a swing that might happen in any given day. So today, Google went up, 3.16%, but earlier in the day, it was up like 4 or 5% even, right? Right when it was opening or very early in the trading. If you're a trader, and I say trader very specifically, not investor, but I mean trader, that's a phenomenal time to put in like a bet. And I say bet because it's kind of like gambling. You're going to gamble a little bit on whether or not you believe the expectations of the world, the street, if you want to call it Wall Street, and retail investors, right? Retail meaning everyday people who are investing for themselves, whether they'll be on Robinhood or through some trader or whatever it is. If you think the expectations are reasonable and a company's going to beat expectations, this is a phenomenal time to buy a stock. And then literally the next day you could trade it. Like, boom, it hits. It's going to pop. You're going to get a 4 or 5%, whatever, 3%, whatever it is. Boom, you get the pop and you can trade. And the same could be true that it can go down. But what I like about it is those that are going to go down, or here's what I suggest you do. And this is what I think I'm going to do in Q2. And I still have an opportunity of doing here in Q1 for some of the companies that are still reporting. I think Facebook and Apple are tonight and a bunch of other companies and stuff. I mean, this is like a huge time for, reporting when it comes to Q1 and all these things. Is that companies all tend to report around the same time because they do the first quarter, right? January to March. And then by the end of April, they have their numbers in place and then they start putting them out. And so you have a huge opportunity of just following when those numbers might be there. You can look at prior reports. You can look at what the expectations are, and you can make a bet on companies. Now, how I would suggest you trade, okay, and I say trade again, difference between trading and investing is that investing is long-term thinking, right? You're betting on a company that you believe in from the perspective of technology, of team, of, prior performance, of, what you think is coming in the future, whether or not that things that are coming in the future are priced in or not. There's 1,000 things you can look at, right? Earnings per share, freaking price earnings ratio. There's so many different things that you can look at. What I love to do is put money into stocks that are about to report, and then only pick stocks that I would want to be in medium to long term anyway. Meaning today, or whatever, this week, I own Microsoft, and I would have potentially bought more Microsoft. I think it's reasonable, okay? Now, it went down on its reporting, unlike Google that went up, both of which are companies I believe in long-term. So it makes sense that right before earnings, I would buy both, and the one that goes down, I just hold, and it'll probably come back up over the next little bit to some degree, and I'm happy to have it anyway. But the one that goes up, and it like pops like a couple of percentage points, I'm really starting to think that maybe that's a good time to like bet big, put like 10K or whatever, whatever's big for you. Get 5%, pull out a good chunk. So now you can lower the risk and you can gain little pops on days like that. You can essentially trade your way into these positions and gain from these bigger moves, this bigger volatility. And if you really want, you can add margins and do things like that. I don't know. It's getting risky. You take the risk you want to take. But I love the idea of potentially trading a little bit more intentionally. And I say trading again, very specifically, when earnings season is going on. And just picking a couple of stocks that I'm going to watch, well, stocks that I normally watch well, that I maybe already have positions in. But I get to bolster that position for a very short time frame and then run out and put that back into safer investments like an ETF or other things later, right? Allowing for that growth in those ways seems like a very interesting way for me to kind of gain some ground. And even if I bet on something and it pulls back a little bit, it's not a problem. You could still remove piece of that position and you could just hold it for a little longer. Because in many cases, these stocks do tend to rebound and do really well anyway. Specifically in the big tech names and those kinds of things, those are the ones I tend to favor. Those are the things I understand, right? Big tech is something I understand. Now, Google, I do want to talk a little bit about Google, had monster Q1 earnings. I mean, YouTube is skyrocketing in revenue. I don't have all of it here, But YouTube is just killing it. And I think the main thing we have to look for in this space is Google Cloud, the cloud computing world where Amazon Prime and AWS, Microsoft and their cloud systems, and Google are the three, really big players in this space. There is a lot of opportunity to be had in that. But I really want to highlight that search is growing tremendously, and that the YouTube year-over-year growth in Q1, like literally quarter-over-quarter growth, is phenomenal. They have a very interesting business model. And unlike Netflix, they don't pay to make their content. They have an army of creators making that content every single day, and they share those revenues with the creators. And I think it's a very financially sustainable model. Now, a company that I love, Tesla, I don't understand. I don't understand what people's emotions are. Tesla posts a $438 million profit in Q1. The biggest it has on its books by far. To give you perspective, in Q1 2020, which is pre-pandemic, right? That's pre-pandemic numbers. Basically, I mean, the pandemic kind of started to hit a little bit at the end there in March, but generally pre-pandemic, they made $16 million in profit. Gives you an idea here. $438 million. Now, people started to hate on that. Why do they hate on that? Because they're like, oh, well, Tesla made money selling Bitcoin. Yes, they made money selling Bitcoin, ladies and gentlemen. They made money selling Bitcoin. That's brilliant. They bought Bitcoin at an average cost of $30,000. It's what now? I don't even know what it's at right now. Let's bring it up. Let's see right here, real fast, right? Right now, let's pull up Coinbase and see what it's at. I don't know what they sold. They made $100 million in profit on the Bitcoin that they sold. It's roughly at 54,000, 55,000. It's floating in between those two things right now at this moment, okay? They made $100 million. They made more money buying Bitcoin than they did selling cars all of 2020 with the Bitcoin holders that they had, because they literally doubled it, basically. And then they sell a little, and now we're like, oh, well, is that normal operations? Well, I think it is. It was normal that they bought some because they were now accepting cash. They're accepting people buying cars in Bitcoin. So that's part of their operations. If they move money out of freaking dollars to euros, is that not part of operations? So it's just another currency. They just made a good currency move. And if they did a good currency move, they have a great CFO and they have a great CEO, in my personal opinion. I'm a little biased. Then, yeah, it's part of great operations. So I'm going to bring up a chart of how Tesla earns revenue, okay? This is from a newsletter that I get called Charter. They send amazing newsletters, by the way. And if you want a newsletter, you could just hit me up. You could text me or you could DM me and let me know that you want access to this newsletter. I'll share the link down below. We could do that. And maybe we should write a note that I should add those links. Every time I mention links, we should write these notes. That's not a bad idea. Okay. A couple of things that people hate on. Regulatory credits, right? Regulatory credits are basically green credits for the fact that they're creating cars that are electric, that essentially they get government tax credits for the fact that they are producing government, electric cars. And everyone says that that's not financially sustainable, right? That's not a model that's going to carry them forward. Well, okay, they made $518 million in credits. But guess what? The reason they're getting these credits is because they're leading the fucking space. They invented the electric car space at this point in terms of mass appeal. Okay, they didn't invent electric cars, but they invented the mass appeal of electric cars in the 21st fucking motherfucking century, bro. Okay? I say, bro, you could be a lady. Bro, you get it? You get what I'm saying? $8.5 billion in revenue from cars, automotive revenues. Services and other, that's a growing revenue stream. Services and other, it has to do a lot with the repairs or things that are coming from old Teslas that are now on the road and been on the road for some time that need upgrades or maybe battery replacements, whatever, I don't know, right? Repairs and different things. And then the energy and generation and storage business. Now, I think the energy generation and storage business is going to be massive. I think the domination they're going to have in the solar panel business, the domination they're going to have in energy storage business, and what they can provide for grid storage, and like how they did that in Australia and how they're doing it in Texas, how they're doing it in all these different places, is huge. Now, They had a cost of revenues of 8.2 billion, gross profit of 2.2. Then they had R&D expenses, which spent $666 million. Awesome. That's a fucking great R&D number. It's doing amazing. It's literally like a huge portion of their money going into that. Sales and general admin expense is 1.1 billion, which is pretty low. I think it's pretty low. It's not like bad for how big Tesla is, and they have multiple factories all around the globe, including in China, including in Berlin, and all these different places. And then they had an operating profit of $594 million, of which $101 million was made off the sale of Bitcoin. Again, they went from 16 million a year ago in profit to 438 million, and the stock goes down? Are you fucking shitting me? Now, I'm a little biased because Tesla's my biggest holding in the stock market, okay, ladies and gentlemen, and I'm not a stock financial advisor or whatever, but it goes down in the earnings? Really? They're crushing it. They're crushing it. Their revenue surged by 74%. They're selling more cars. They're literally outperforming the delivery numbers. They're doing everything right, in my opinion. Tesla is a company that is innovating the shit out of the space. And I don't give a shit if you think that their Bitcoin revenues are unsustainable. First of all, no, they're not. I think Bitcoin's fucking going to the moon because I'm on that HODL train. Okay? HODL, if you ain't understanding. If you ain't understand my crypto lingo, maybe you should join my text community. Link down below. I share some thoughts about what I think about the stock market, what I think about crypto every single day that the market is open. Now, crypto is open all the time, 24 hours, 7 days a week. So I take the weekends off, ladies and gentlemen. But when the market is open, I share my thoughts on what I'm doing, what I'm thinking about, what I'm trading for me, right? For me and for those who are just interested, by all means, they can take that advice if they want to see it as advice. It's not advice for legal purposes, but it is just my opinion. Kind of like Joe Rogan has his opinion. Kind of like Joe Rogan has an opinion and he just gets to share it. Anyway, if they're making money off crypto, great. They made a good move. That's fucking smart. If they're making money off of tax credits because they innovated the shit of the space and they're collecting tax credits while Ford and GM aren't, that's even better. Yes, tax credits are a thing. And guess what? With the climate change conversation, we're going to have tax credits for a very long time. You don't think we're going to have tax credits for electric cars for some period of time? What about tax credits for solar panels? What about tax credits for energy storage? You don't think that Tesla is going to benefit from tax credits for like the next decade? Are you crazy? That's a very sustainable revenue source. That's governments pouring money into more of what they want to see. And countries like Canada or the EU or all around the globe, they're trying to incentivize these things. They're going to cash in on those incentives. So to say that their revenue wasn't that great, they're shipping more cars, they're making more cars, they're shipping more cars, people are buying more cars. Fucking Elon went as far as saying Model Y is going to be the number one selling car. I think it was in 2022 or 2023. He thinks by 2023, the Model Y is going to be the number one selling car on the planet, beating out Toyota, which I believe is the Toyota Corolla, right? The biggest car company on the planet. He thinks they're going to sell more cars, or more Model Y specifically, which is the kind of crossover, the latest car they built, really, right? It's that mid-range crossover style kind of car. Man, I don't understand how people don't believe this story. I can't even believe that this stock is still shorted the way it is. I can't believe that people are still hating on what is now the richest man in the world with one of the most successful companies on the planet that is absolutely altering everything. I don't get it. And with that said, I'll just end it there, and I'll transition into the third segment, which is